Good morning. As the sun rises over the world's financial capitals, a new week begins with anticipation and uncertainty. As we start this Monday, November 17, 2025, global markets are holding their breath, waiting for signals that could set the tone for the days ahead. Investors everywhere are on edge, watching for major news that could shake up the stock market and shift the momentum in either direction. The spotlight is firmly on NVIDIA's upcoming earnings report, a tech giant whose results have the power to ripple across the entire market, especially in the fast-growing AI sector. But it's not just about NVIDIA. The U.S. jobs report is also due this week, offering a crucial update on the health of the world's largest economy and providing insight into consumer confidence and spending. The Federal Reserve will be watching closely, as this data could influence their next move on interest rates, which in turn affects everything from mortgages to business loans. After a strong run in tech stocks, last week's volatility has made investors cautious, with many wondering if the recent gains can hold, or if a correction is looming. Everyone is searching for a clear signal. Will the rally continue, or is a pullback just around the corner? The uncertainty is palpable in boardrooms and trading floors alike. NVIDIA's report is seen as a key test for the AI boom and the broader market, with analysts eager to see if the company can maintain its explosive growth. This week is a crossroads for technology, the U.S. economy, and investor confidence, as all eyes turn to the data and decisions that will shape the months ahead. From New York to Tokyo, money managers are analyzing every headline, every data point, and every market move, trying to predict what's next in this high-stakes environment. Will markets keep climbing, or is a correction ahead? The answers will start to emerge in just a few days, but for now, uncertainty reigns. We'll guide you through the twists and turns as this pivotal week unfolds, breaking down the stories and numbers that matter most. It's not just about numbers on a screen, it's about the financial future for millions of families, retirees, and workers whose lives are shaped by these market moves. Investors are slowing down, waiting for the signal to move, knowing that one headline could change everything. The stakes are high, and the world is watching, as every development could have global repercussions. This is the calm before the storm, or perhaps the calm before the next big rally. The atmosphere is tense, but opportunity may be just around the corner. Stay tuned as we break down what matters most. Let's dive in and make sense of this critical week together. Let's focus on NVIDIA, the company at the center of this week's market drama. NVIDIA makes the world's leading AI chips, essential for technologies like ChatGPT. Since late 2022, NVIDIA's stock has soared nearly 1,000%, making it a $5 trillion titan. Its rapid rise has set sky-high expectations for its earnings report on Wednesday. Investors want proof that demand for AI chips is still booming. A strong report could boost the entire tech sector and confirm the AI revolution's momentum. But if NVIDIA disappoints, it could trigger a sell-off across tech stocks. The company's results are more than just numbers. They're a test for the whole market's optimism. That's why all eyes are on NVIDIA this week. Its performance will ripple far beyond Silicon Valley. The stakes couldn't be higher for tech investors. Wednesday's report could set the tone for months to come. Caution is the mood on Wall Street. After months of surging stock prices, investors are pausing, waiting for a clear signal. Last week's tech wobble reminded everyone that markets can turn quickly. NVIDIA's earnings are the main event. Its results could either reignite the rally or spark a downturn. Expectations are sky-high, and even a small miss could shake confidence. If NVIDIA's report is strong, it could be a green light for more gains. But any sign of slowing growth might trigger a broader sell-off. Trading has been quiet, with investors holding back until the news breaks. The calm in markets shows just how much is riding on this week's announcements. Everyone is waiting for the signal to move. The next few days will reveal whether the market's optimism is justified. It's a high-stakes waiting game. The outcome could shape the rest of the year. Wall Street is moving cautiously, with early signs pointing to a slight uptick. The mood is one of careful optimism, as traders and investors weigh every piece of news before making their next move. There's a sense that the market is holding its breath, waiting for a clear signal. Futures for the S&P 500 and Nasdaq 100 are up, but investors aren't making bold moves yet. The gains are modest, reflecting a market that's alert but not ready to charge ahead. Many are choosing to sit on the sidelines, watching for more concrete signs of direction. Last week ended with mixed results. Tech stocks rebounded after a sharp drop, but nerves remain. Volatility is still fresh in everyone's mind. and the memory of recent losses keeps traders on edge. The market's mood is fragile, easily swayed by the latest headlines. The market is quick to react to any hint of trouble or strength. Even the smallest news can trigger a flurry of activity, as everyone tries to stay one step ahead. It's a high-stakes environment where timing and caution are everything. Interest rates are a big topic. Hopes for a December Fed rate cut are fading. The possibility of higher borrowing costs is making investors rethink their strategies, and uncertainty about the Fed's next move is adding to the tension. Recent comments from Fed officials suggest they're not ready to lower rates just yet. Their cautious tone has left markets guessing, and many are now bracing for a longer period of elevated rates. The delayed U.S. jobs report, due Thursday, will be crucial. Investors are eager for clues about the health of the labor market, knowing that this data could influence the Fed's decisions in the coming months. A slowing job market could actually boost hopes for future rate cuts. If hiring cools off, the Fed might feel more pressure to ease up, giving the market a reason to rally. Investors are watching every data point, trying to read the Fed's next move. Every chart, every report, and every statement is being scrutinized for hints about what comes next. The dance continues, one careful step at a time. No one wants to be caught off guard, so every decision is measured and deliberate. The jobs report could tip the balance. A strong or weak number could set the tone for the rest of the month, shifting expectations in an instant. Wall Street is ready to react, but for now, it's all about waiting. The anticipation is almost palpable, as everyone prepares for the next big move. Every headline matters in this delicate moment. News can change the mood in seconds, and traders know that fortunes can shift just as quickly. The next move depends on what this week's data reveals. Everyone is searching for clarity, hoping for a sign that will break the current stalemate. The stakes are high for everyone with money in the market. In this environment, patience and vigilance are just as important as boldness, as Wall Street waits for its next cue. The Federal Reserve is the economy's pilot, steering with interest rates. Lately, investors have hoped for a rate cut, but Fed officials are signaling caution. Recent comments from key Fed presidents show they're not convinced inflation is under control. They want more proof the economy is cooling before making borrowing cheaper. This has dampened expectations for a December rate cut. The Fed relies on data, especially the monthly jobs report. This week's delayed jobs data is expected to show a slowing labor market. If confirmed, it could pressure the Fed to consider cuts in the future. For now, the central bank and investors are in wait-and-see mode. Thursday's jobs report could shift the outlook. The Fed's next move hangs in the balance. The mood of caution isn't limited to the US, it's global. In Europe, markets barely moved as investors await US news. The Stoxx 600 rose just slightly, reflecting hesitation. In Asia, markets fell, with Japan's Nikkei dipping after China warned citizens about travel to Japan. This hit Japanese retailers hard, showing how political news can move markets instantly. Chinese and Hong Kong stocks also dropped, continuing a trend of weakness. Japan's economy shrank for the first time in 18 months, partly due to US tariffs. A new $110 billion Japanese stimulus plan pushed bond yields to a 26-year high. These moves show how interconnected and sensitive global markets are. Every region faces unique challenges, but all are watching the same signals. The world's markets are holding their breath together. This week's US news will echo worldwide. NVIDIA isn't the only company in the spotlight this week. Major US retailers, Home Depot, Target, and Walmart, are also reporting earnings. Their results offer a window into the health of the American consumer. Strong sales at Home Depot could signal confidence in home spending. Target's report will reveal if shoppers are buying more essentials or cutting back on extras. Walmart's massive reach makes its results a key economic indicator. These reports will show if consumers are still spending or starting to pull back. Together, they provide a real-world check on the economy's strength. Investors and economists will be watching closely. The retail sector's health is a crucial piece of the puzzle. Beyond stocks, investors are tracking gold, oil, and Bitcoin for clues about the global mood. Gold dipped slightly to $4,072 an ounce, but remains up 55% this year, a sign of nervous investors seeking safety. Oil prices slipped, with Brent crude at $63.98 a barrel, reflecting uncertainty about global demand. Lower oil prices can help consumers, but volatility remains high. The US dollar strengthened, with the euro trading just below $1.16. A strong dollar signals global caution and a search for safety. Bitcoin rebounded 2% to 95,517 after last week's sharp drop. Crypto remains volatile, with big swings attracting risk-tolerant investors. These moves in gold, oil, and Bitcoin all reflect the market's anxious mood. Investors are hedging their bets, waiting for clarity. Commodities and currencies are sending their own signals. The world is watching every tick. This week's news could shift everything. This week marks a crucial turning point for markets and the global economy, with a series of high-stakes events set to unfold. Investors, analysts, and policymakers are all on edge, watching for signals that could shape the months ahead. NVIDIA's earnings will be a major test of whether the AI boom is still translating into real profits, or if the hype is starting to fade. The company's results could set the tone for the entire tech sector. The U.S. jobs report will reveal if the economy is cooling or staying strong, offering clues about the health of the labor market and the direction of future growth. Fed officials' comments and new data will shape expectations for interest rates, influencing everything from mortgage costs to business investment decisions. Retail giants' earnings will show if consumers are still spending or starting to pull back, a key signal for the broader economy as household spending drives much of the growth. Global markets from Europe to Asia are all tuned into these signals, as decisions made this week could have far-reaching consequences for economies worldwide. Movements in gold, oil, and the dollar reflect the tension and anticipation, as traders try to position themselves ahead of the news. By week's end, we'll have a much clearer picture of where we're headed, and which sectors might lead or lag in the coming months. Investors everywhere are waiting for the green light, or a warning sign, before making their next big move. The results and reactions will ripple through every corner of the market, affecting portfolios, strategies, and even everyday financial decisions. It's a pivotal week for everyone with a stake in the economy, from Wall Street to Main Street, and the outcomes could set the tone for the rest of the year. We'll be here to break down what it all means, helping you make sense of the numbers and the headlines. Stay with us as the story unfolds, and as we track every twist and turn in this high-stakes week for the global market.